The recent worrying crypto crash has many investors impatiently perched on the edge of their seat, waiting to see what happens next for the market. But can the crypto market recover, or is it doomed to failure, consigned to the annals of history as a quirky gimmick we will look back on in the future? Right now, nobody truly knows. Today we are discussing cryptocurrencies that have crashed and what it means for their future. Stay tuned. First up, what caused the recent crash? Well, the recent crypto crash has been the result of the perfect storm, which has seen a handful of factors work against the market, so there's no one simple answer. Rising inflation thanks to the global economy struggling to recover after the COVID pandemic, as well as interest hikes around the world and instability and delays in the supply chain brought about by the Ukraine crisis have all worked against the crypto market. Interest rates were hiked by 0.5% by the Federal Reserve System, the first time that had happened in over 2 decades, which saw crypto fall severely recently. On Thursday, May 12th, the market lost $200 billion in just 24 hours, whilst Bitcoin dropped to a 3-month low. It recovered slightly a day later, but it has still lost more than half of its value in just 6 months. People have also pointed to the fact that the crypto market is heavily linked to the stock market, which has also seen a sharp fall in recent weeks. And this recent behavior has led to Bank of America analysts suggesting that Bitcoin is now acting like a risk asset, to the disappointment of crypto enthusiasts. Bitcoin was long touted as a stable coin due to its lack of reliance on gold, which is of course the most notable store of value. But because crypto moves like a tech stock, it also behaves similarly. So when they dip, so does crypto. Let's discuss those tanked stocks then. Stay tuned. One of the biggest losers in the crypto crash is, of course, Luna, which has taken a huge hit of late. If you had invested £1,000 in Luna back in April, you could have expected to have made a few pounds by now. However, thanks to the crash, that £1,000 is now worth just £4, which is a massive loss, of course. Luna was the biggest loser, but they were far from the only one. On average, the entire market was down around 30%, but some have since recovered. However, this is still one of the biggest crashes of all time, and as such has people questioning what the future of the market looks like. The crash was linked to an attack on Terra, UST, which is the sister coin of Luna, which is now currently trading at a paltry 18 cents. And once the market had realized what was happening with Terra and Luna, panic ensued. People withdrew their funds from the market, which in turn caused panic to spread even further. Most stablecoins rely on perception to get by, but once this perception takes a bit of a knock, the effects can be disastrous. And these recent market dips have led to people and crypto traders all over the world asking just how stable these stablecoins actually are. Have you been affected by the crypto crash? Let us know below. So how stable are they? Let's discuss. Of course, you will probably be aware that stablecoins were designed to have almost zero volatility, offering investors a safer bet in theory. And a stablecoin should, in theory, be worth around $1, as they are generally pegged to the US dollar. But the recent crypto crash has questioned all of this, which was underlined with the stablecoin, Tether, dropping to 95 cents. So if stablecoins aren't actually that stable, where is the safe space in the crypto community? Issuers have said that fiat stablecoins are pegged to dollars, but while they are not required to provide much clarity, operators have offered varying details. And with all of the recent goings-on within the market, some people have said that stablecoins really aren't that stable after all. And whilst they can be used for international remittances or sending money across borders, people have claimed this poses a risk as there are little to no regulations. Stablecoins are a form of private money, however, unlike traditional fiat currency. They're unrelated to the government and are backed by companies, which of course has its own risks. During economic instability, you can never quite tell if these companies are going to survive, and you will run the risk of not getting your investment back. Do you hold any stablecoin crypto? Let us know below. What does the future hold for crypto then? It has been suggested this past week that with traditional investors turning to the space, we could see a comeback for the crypto market. Some of Wall Street's biggest players now have dedicated crypto teams, which signals that the big boys are now ready to join the party. As well as this, mainstream hedge funds are also putting a lot of time and effort into digital currencies. These days, there are more institutional investors with exposure to crypto, and most see this as a buying opportunity, according to Terra capital manager Paul Veritatakit. And he's not the only one who sees the opportunity in the recent crash. Kate Rauch, chief marketing officer over at Coinbase, has suggested that whilst volatility is painful, it is also natural for emerging technological breakthroughs like crypto. She went on to reveal that Coinbase are inspired by the long-term view and the spirit of those who continue to keep innovating, no matter the external environment, which is a bit of relief for those who have a lot of funds tied up in things like Bitcoin. And while some speculators have suggested it will hover around $30,000 for the next few weeks, MicroStrategy boss Michael Saylor has claimed that Bitcoin will eventually climb into the millions. He said, "There's no price target. I expect we'll be buying Bitcoin at the local top forever, and I expect Bitcoin is going to go into the millions. So we're very patient. We think it's the future of money. What do you guys make of this?" Next up, one man who has lost everything with the Luna crash has been speaking out. Of course, the recent crypto crash has backed a lot of people around the world into a financial hole, and one man in South Korea has told of how his life is now in ruins. And as we know, there are no guarantees in the world of crypto. However, many people are attracted to the market due to its potential as a serious money spinner. And one man over in Korea, known as Chancers, has revealed how when the news broke, he decided to knock on the door of the Terra Luna creator Do Kwon, who was actually arrested by police. Speaking recently, he said, "I felt like I was going to die. I lost a lot of money in a short period of time, around $2.4 million, 1.9 million pounds of my cryptocurrency was wiped out." He told of how crypto had made him pretty wealthy, but after the recent crash, he is now in trouble. Terra Luna became prominent at the end of last year, but it has now lost 99% of its value. So Chancers decided to take the bull by the horns and go and find Do Kwon, claiming that he wanted to ask him about his plans for Luna. "I suffered a huge loss and wanted to talk to him directly," which is probably fair enough, right? He streamed the event online, but was disappointed when Do Kwon's wife answered, and even more so when she called the police. Apparently, it's illegal to go to someone's house to talk to them in Korea. And finally, news that Binance actually promoted Terra before its collapse. As you will know, Binance is one of the biggest players in the crypto trading platform space, and it has been revealed this week that they actually promoted Terra USD as a safe investment just weeks before its value plummeted. The $40 billion wipeout is seen as one of the biggest ever losses in crypto history. But on April 6th, Binance actually advertised a safe and happy opportunity on its Telegram channel. Oh dear. Traders who were holding large amounts of Terra and Luna earlier this month lost out big time as the coins crashed, and a lot of traders used Terra Luna in a lending program known as staking, but would have been confident in using the coin thanks to Binance's ringing endorsement. And their promotion of Terra shows how willing people are to part with investments, as long as they are backed by a prominent platform. Now, regulators have suggested that platforms promoting certain cryptocurrencies should not be allowed to, as small investors are putting their trust in a system which has little to no protection. What do you guys make of all this? Let us know below. As usual, thanks for stopping by today, and remember to join us next time for some more fun and games. And why not do us a solid by liking and sharing today's video with any crypto enthusiast you might know of, whilst also subscribing to our channel so you don't miss out on any great content in the future. Adios, amigos.